Good morning, good afternoon, good evening, and welcome to the very late running. My deepest apologies, guys. The very late running Monday, the 31st of October. Happy Halloween. So all sorts of spooky things going on. First thing to say is apologies. I doubt that anyone's actually watching this live. Actually, maybe we have a few of our European UK users because UK Europe clocks changed. We went back, came off of daylight savings time back to normal time this last weekend. And I forgot that's obviously going to impact differently in the US because the US doesn't come off, I think, for another week. So for the next week, there is only a 4 hour time difference between, say, Eastern and the UK. London and New York, for example, it's usually 5 hours. So that's screwed things up a little bit in here for me in here today. So my apologies, my bad on that one. And then further apologies also, although beyond our control, this one, not just a mistake, but beyond our control on the front that we have. Yes, so we have issues. It's a third party issue. It's not a trade day issue, but obviously it's affecting trade day. So we are still working on it. We are waiting for a fix from the third party. It's still being worked on. Don't worry that all your data is being captured, but it does mean we have issues with the dashboards not updating. It means we have issues with the resets. When you purchase a reset, we have to kind of manually do that rather than it being auto done. So that's taking time. So please be patient if you purchase a reset and it doesn't immediately reset. Send us an email. And then also remember, there's no new sign up, so that's probably not really an issue for you guys who are sitting in the members area here listening to this. But yes, it's not great for us that we can't sign anyone else up new at the moment. So that's a pain for us as well. But I mean, apologies for all of that. Apologies for this late running. Hopefully, some of you will pick it up on the catch up. This is going to be recorded, this webinar. I'm going to keep it relatively brief because no one's going to be on live. And then also there's not a huge amount to say that we kind of haven't run through from Friday. We did get that surging rally back on Friday to stock indices. Market went into full risk on mode. The PCE data, just looking back at the data in here, if I go back to Friday's data in here, so just bear with me on that. So if we click through back into Friday's data and scroll down for the US, so we had the PCE data in here coming in pretty much in line with expectations, but with personal spending still doing well in here. So the consumer stays strong, but with the PCE, the price index data, pretty much in line. And what that meant was that the market took that as a real positive, okay, in here. If anything, part of this PCE data, the year on year was actually slightly below here. You see slightly below expectations. The month on month came in line, the year on year slightly below. So the market took that as a real positive. And you know what? You have to say, pretty much the market is in that has been in more in bull mode, risk on mode since that CPI data that we got. Now it's nearly a month away because it's coming up in just about over a week. So it's from about 3 weeks ago, the CPI data, where that was the day. Remember, I did say there's a good chance that could be the bottom going in. We had that massive intraday turnaround day, big macro shift, big technical shift on that day, and so the market since then has been certainly playing things from more like the risk on scenario, with a risk on tone, with a bullish tone on the equity indices. And that was, really reflected on Friday. I mean, a huge update. And remember, this is on the back of a week when we had Amazon, Google, and Meta, Texas Instruments as well, all reporting kind of quite negatively. And then Apple was like the bright part of the announcements, but basically just in line, and actually with some negative guidance. So the upside we had was from Apple, which was kind of neutral, really, and everything else on the big tech, which is a massive driver of these major indices. Clearly, obviously, the Nasdaq and the S&P. You know, the all the data, all that micro data, all that earnings data was really negative for big tech last week, and the market's still putting that outstanding Friday. I read, I think, at the weekend that we're on for one of the best up months since, or maybe it was the best October since like 1976 or something. I don't know. It was for since a long time. A huge potentially coming in for a massive up month in here. So yeah, I mean, looks like money being put back to work. Real money may be coming into the market, and certainly Friday. This PCE data didn't, give us enough. Shouldn't have given us enough impetus to do what we did on Friday. So a really, really, really strong session, reflecting the strong sessions that we've had, and really showing us that the market is in bull mode at the moment. It's in recovery mode, and I think to an extent that the market's now kind of starting to price in maybe the Fed is going to be less hawkish. And if we start to look at the CME tool in here, though, we've still got, it's not completely nailed on, but a very, pretty much nailed on that we're going to get a 75 basis point hike at the next meeting. But now we've got to the point, it's like 50-50 between a 50 basis point and a 75. In fact, if anything, now we're more leaning towards the 50 basis point hike at the following meeting. So we're looking for a 75 and a 50, and then the peaking rates now going to the 475, 450 level, which with and that's down from at one point only a couple of weeks ago, it was 500, 525. So, overall in here, we're seeing the market starting to anticipate a less hawkish Fed. And obviously we've got, a massive time coming up now. And if we look ahead to the data in here, and I've got to go for this week's. We'll just do a quick run through of what we got for the broader week in here. But going into today, let's take a focus on today. First of all, we've had some European data in here. CPI printed very high in here for the Eurozone at 10.7%. So that was certainly a negative in here. And I think, look, Eurozone inflation sourced a new record, 10.7% in October. Okay, so a new record level for Eurozone inflation. Remember, the Eurozone's only been around for 20 years. So, we haven't seen this kind of inflation anyway in the Eurozone since its inception. So, it's hardly surprising it's going to a record level. But a record level there, above expectations as well. So that's certainly a negative on that front. Looking ahead to today, we've got nothing really significant coming out of the US. Okay, no real significant data, but it is a big week or so we've got coming up. So if we sort of scoot ahead, Tuesday we've got ISM, we've got data in here, ISM manufacturing data in here coming through on Tuesday. I'm certainly going to be keeping our eye on that. Moving through the week, German manufacturing PMI data through on Wednesday. And then we get the Fed. So the Fed is on Wednesday. So they're really critical, the Fed. And then that comes in a week that we also get durable orders and then non-manufacturing, the service sector data from ISM on Thursday. So it's a really big week. Both sets of PMI data. And then on Friday, we get the, where are we? Here we go, the employment report. So a massive week, right? So we've got two sets, very quiet today. I think we're going to have a marking time day today. I do not expect the market to do much, given we've got the PMI data Tuesday, Thursday, the Fed on Wednesday, and the employment on Friday. Massive, massive week, okay? And then I think going into next week, then we have, I think, CPI the week after. Okay, so it's a huge, huge week, and really watching the Fed. The Fed, are they going to start? When they're not going to, they're still on track to do those hikes, so 75 and probably 50 by the end of the year. However, are they going to start to say, signs of inflation? If we get any kind of comment on inflation starting to recede, it could just be a sign that they're ready to think about pivoting at some point going forward. So, we're going to be certainly watching, really watching the Fed this week. It's going to be super important. Let's take a turn to earnings going into today. It's not, you've got most of the big stuff behind us now. Berkshire Hathaway, we do get today, but you can see even if we scoot through the week, I'm going to probably focus far less on this. We do have Pfizer and AMD coming Tuesday, but if you go through now, we've got all the big guys have gone now, really. Qualcomm, CVS Health, coming up Wednesday, Conoco, yeah. So we're kind of through the big reporters in here at the moment. Nothing really for us to focus on. So I probably won't be focusing on the calendar too much going forward. Let's take a look at 5 things you need to know to start your day. So Fed, clearly, we've already spoken about that. So, yeah, I mean, nothing new in here that we haven't spoken about already. Events risk beyond the Fed, 3 other events in the coming month. Yeah, we know I've already gone through some of this. Jobs report, I've already mentioned that. CPI as well. That's on November 10th. Oh, the midterm elections as well. Sorry, that's going to be obviously important. If we get a divided Congress, yeah. So, look, as for the elections, stock bulls are hoping for a divided Congress, which has historically benefited equities. So gridlock politics is often good for, it seems kind of counterintuitive, but if we get a divided Congress, then it's often been good for stock markets because it means no change, and the equity markets are happy with no change, no major policy shifts. Okay, grain woes. This is talking about the flow of grain coming out of Ukraine because of issues with Russia, and there's bombardments in the Black Sea Initiative, etc. So yeah, I mean that's not really impacting us. Wheat prices have jumped in Chicago, but not really looking at those kind of markets. Not really impacting us. Stocks slightly down this morning. What else do I have in here for you? Futures fall before earnings. Central bank moves. Yes, it's big week basically, and wheat surging higher. Russia exits its deal on these shipments. What else do I have for you? Eurozone inflation was spoken about. Futures fall. Investors hope for a less hawkish Fed. So yeah, we're looking at that going into this week. Wall Street week ahead, hopeful of US stock ready to set for a date with Federal Reserve reality. So yeah, everything we've already spoken about already. Take 5. It's rate hike central. Already spoken about that. Reuters highlighting that as well. Pounds dipping lower in here, but it's been a big up month for the pound. So we've gone back into risk on. Most currencies running against the dollar. Dollar weakened significantly over the last 2, 3, 4 weeks in here. Italy's economy not big for us and the markets we're trading at, but grows stronger than expected. So so what we're seeing in here, we are seeing inflation start to dip slightly, and we're seeing basically the consumer globally stay relatively strong, and economists staying relatively strong. Yes, they're slowing down, but relatively strong. European bourses, European exchanges this morning are fairly unchanged. And in here we had that big update. So look, Dow was up 2.5, Nasdaq about the same, I think, on Friday. And we've dipped by about 0.5% in here this morning between the Dow, the S&P, and the Nasdaq between 0.45 and 0.65% lower. So already looked at the Fed tool. Let's go and take a look at the charts. So first of all, I'm going to kick off with the S&P on the daily. There's that it's Marabuzu candlestick. That's a Marabuzu candlestick is like this one here as well. We have one back here. That was 2 days. There's a CPI turnaround. A Marabuzu candlestick is one where the market kind of opens on one level and then closes at the other extreme. So it's usually a long impulsive candlestick where you open either at the low and close at the high. That's a bullish Marabuzu. So that's a bullish Marabuzu, another bullish Marabuzu here. And there we have like a bearish kind of Marabuzu, opened on the high, closed pretty much near or at the lows. So a bullish Marabuzu candlestick. And probably no surprise, we had a little bit of a dip lower from that. And if we go into the 15-minute chart, here's the dip, a little bit of a wobble, but look, there's that huge surging rally from Friday. And really, I mean, that was super impressive. Given everything that the markets had thrown at it last week on the earnings side, we didn't get anything particularly amazing on the macro side, but nevertheless, the market continued to build on this whole rally. I mean, a really impressive day Friday. And despite this dip we've seen in here, I'm expecting more of a consolidation day today. But despite the dip we've seen, if we go and put just like a Fibo on from Friday's high and down through the low of like Wednesday, Thursday, Friday. We've only just dipped to the 23.6%, the very first retracement level, and holding there. Now it does look a little bit wobbly as we go towards the open in here, but nevertheless, I think I'd prefer to be waiting for as this turns. I mean, there could be one more dip lower in here, a bit of profit taking maybe from Friday, and given some of the kind of slightly negativity on some of the news we've had in this morning, Russia for an example, but maybe a little bit of dip. I'd be looking to buy into the dip in here and looking for the break to the top side again, and maybe employing this little counter trend line that we have through from this morning. So off of Friday's peak through today's peak, the market seems to be respecting that. We went back up to that and failed, back up through that counter trend line. So on the S&P, that's currently coming in around 3,900 actually. So up through 3,900 looks worse. I mean, below the low, it would also be the 23.6. Down through like 38.80. What have we got here? 38.84. That would look a little bit wobbly again, but then looking for support to kick in. Look, these little lows in here. So looking to support to kick in around maybe 38.70, 38.69 on the downside. Let's take a look at the NASDAQ. Again, Marabuzo candlestick, again a dip, no surprises in there a little bit. Not quite as bullish on the NASDAQ in that we didn't make a new recovery high, still capped by the highs from previously last week. But we are dipping, but nevertheless going to 15-minute. And again, if I put the same fib on off the top through to this is like Thursday's low, I think. Yeah, not Friday's low, Thursday's low. And then in here, you'll see, look, again, 23.6% is holding, and the market dipping back. So below the current overnight low, 11,483.75. The retracement comes in at like 460, around 460, and you've got this little swing low there as well, 11,435. I'm looking for that 460, 435 area to try and hold. If we hold above there, again, looking for the swing higher. And again, you can use the little counter trend line off of Friday's high and off like the overnight high in here, because the market respected that. This more recent move in the last hour or so, looking for a pop back up through there. That is coming in around 11,535, that trend line. So that's where I'm looking on the top side. Let's have a quick nod to the commodity markets, starting off with oil. Big down day today for oil. So certainly damaging this more positive tone we've had. And we go to the 15-minute. The problem here, I think, for you is like oil traders, do you sell it with it already down as much as it's down? It's a big down day already today. Pushing daily extremes. You look at like these other bars in here, you put on the ATR, you'll see that if you put on the ATR, you're probably going to see the market now coming towards extremes. A big day for oil. A fairly big day is going to be what is about $5 in here at the moment. Okay, there's a big day for oil, $5. Kind of a more normal day is coming around $4. About $4. And today's day is already 85, 88, 88, 60. So we're over $3, about $3 today. So maybe it's only got $1, more to and that's back through the low, maybe $1 to the downside. I still prefer to play it from the downside. It still looks bearish. It's not recovering in here. Lower lows, lower highs. If it gets back above the very recent peak, 86.78, it looks more bullish. Back down through the low, maybe there's another $1 down below the low. It kind of held at this support here. See this little swing low here, 86.16. The low so far has been, where are we? No, 86.62. No, 85.88. Oh, we've already gone through that. 85.88. Is that low there? No, 85.82. Sorry. 85.82 is the low over here. Okay, that's from what date we got that on? That was from the 26th of last week. So 85.60. No, sorry, got it wrong again. 85.82, and we've been down to 85.88. So down through 85.82 looks more negative. Maybe you could extend another $1 to the downside. Let's take a look at gold. So gold in here, rolling over. It's not really followed as well the risk on theme that we're seeing on the equity markets. Significant down on Friday, lower again in here this morning. It's taken out that low there from last week. That low was 1641.2. We got down just below it on Friday and now more firmly below that. This has got potentially more downside going into today. Go into the 15-minute chart on gold. yeah, we've just had an impulsive move. Probably now, given how close we are to the current low, probably waiting for the break of the low. 1638.4 on the downside. This could easily lose another $2-3 below there. Okay, there's not a lot of support in here now for gold. Look, this big gap in here. So yeah, looking vulnerable on the downside for gold. So gold and oil looking vulnerable to the downside. Stocks for me still looking fairly positive. I'm going to wrap it up there. Normal service, normal times for you in the US. So what we'll do is, whilst we've got this 1 hour difference, we'll bring for you guys. So we've got a few of you guys on in here. I see from UK and Europe. So if you're on right now, guys, okay, and you came on because you thought this was the normal time, we're going to shift. I'll put a note into the activity feed. And we will shift for the guys in the UK and Europe. We're going to shift it forward by an hour, so we're going to be coming on 11:30 UK time for the next week. Okay, because then that lines up with the US time. Okay, so and this is really obviously we're trading US markets, so we want to be in before the US data comes out. So yeah, we'll have the webinar the same time as it is in the US and UK as of tomorrow. Sorry, in the US. So we're going to stick with our normal times. So if I come back in here, I need to go to the trading room. We're going to stay with the normal times. So in here, daily webinar 6:30 Central and 7:30 Eastern. Sorry, in the US. So 6:30 Central, 7:30 Eastern. We're going to stay with those times. We'll be doing it for the rest of this week, 1 hour earlier, UK European times. Okay. And my apologies for the late running. Again, extending our apologies for this third-party issue we're having with the dashboards and with the resets. If you do try to reset and it doesn't work, please send us an email. And yeah, and with respect to the dashboards, all your data is being captured. Obviously, you can follow your daily P&L. All your data is being captured, but we will update the dashboards as soon as we can. All right, guys, take care. Have a good one. And we'll be back with you at the normal time for you in the US tomorrow on Tuesday.